Hi, welcome to this video today, which is on the 12th of July. We're on Sunday. We're just going to be looking at three trade setups today, which will include the British pound. We're going to be looking at GBP, AUD, GBP, NZD, and finally GBP SEK. We'll go over to the charts in a moment. Now, in terms of the fundamentals, pound is very oversold. Speculators are heavily short, and we think the pound is going to have a major rally to the upside, and technicals are starting to confirm this in our view. Really good risk reward on all three trade setups. So let's go and take a look at them. But just before we do so, please do keep in mind it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, all you need to do is click on the link beneath this video and you'll get live access to our member center, and you can also follow us on Facebook as well. Right, first trade setup is going to be GBP AUD. All right, GBP AUD daily chart, really big downtrend, and we've got a little bit of strength. I think pound now has limited downside and plenty of upside. That's to do with the fundamentals and sentiments. Let's go through these points before I draw my levels. Now, in terms of this quote here, Britain will suffer the sharpest peak to trough economic slump of any major economy this year, rating agencies Moody's warned on Friday. And the coronavirus crisis will push up national debt as a share of GDP by nearly a quarter. Fitch ratings agency share a similar view. Worst eventuality, is it in the price? I think so. And both Fitch and Moody's have said UK growth and so forth will pick up from here. What about other potential negatives? Well, market tends to throw in Brexit uncertainty a lot, but a deal is likely. It's odds on bet. The EU already agreeing the City of London can have access to European markets. And that was always seen as a major blow to the UK if they didn't. Okay, they will. Both sides need a deal, so I think that's out the equation. Market also focused on the potential for negative rates becoming a reality in the UK. That's discounted up at the buying market is the bond market. I don't think the UK are going to move to negative rates. They've said they're looking at it. It's not on their agenda right away. But the bond market is discounting that eventuality. Let's move to Australia. Australia, worst is ahead for the Australian economy. It's more exposed to global growth than the UK. And if we get risk off, again, the Australian dollar is going to get hurt hard. And I think, if you look at Australia, it does have high unemployment and plenty of debt. Markets saying it's got a current account surplus, and they're taking that as a positive. But is it? It's not that big, and that could easily go negative as we move forward. The outlook for the global economy is not going to be a V-shaped recovery. Okay, market is assuming that, and I think with no substantiation in fact. Okay, also I think another point that's really important is the last 2 weeks have seen commercial smart money buy sterling heavily. Okay, as speculators have sold sterling heavily, so the smart money is coming in to buy sterling. I think basically it's because of the reasons that we've just gone through. UK, the worst is over. For Australia, things can only get worse. I've already said that my risk off as an additional bonus for the GBP. It is, but even if we don't get risk off, I think the pound could well rally. Now, in terms of here, we snap the 20-day moving average, the green line. And you'll notice as we come down, we can't get through it. We've only just gone through it, okay? Yeah, the break was in April. It's been a really strong trend, despite, let's say, this negative news here from Fitch and Moody's. The pound is not weakening, is it? So I think the pound is on the way up. We've sliced out the 20-day moving average trajectory in there. 180 looks good support. Really, just get through the high, and I think we'll be off to the upside. How far could we run? My own view is this level here, also a big weekly level, 190. So if we break out and follow through, I think the pound should move up on higher volatility or higher volatility. Volatility is relatively low at the moment. Stop well back from the 180 level. If we fell back towards these lows here, you just come through the 20-day moving average again, in my view. So it's a decent risk to reward, well over 4 to 1. And there could be how many pips ahead? 850 potentially. Obviously, you've got to manage the trade as it runs. But market way too bearish of sterling in our view, and a sizable rally, I think, is on the cards. Right, let's go to the next pair, GBP NZD. GBP NZD daily chart, and in terms of the NZD, very similar fundamental backdrop for New Zealand. Just very similar to Australia's, and we're looking for the GBP to rise on both, obviously, which is the best. Not sure which will be the best performer. If the pound does go up, you can always split your risk between the two and count it as one trade. But in terms of technicals, pretty similar to the GBP AUD. Come through the 20, you do get back through it here a bit, but you can't get any significant penetration. Then held by the 20, and now two little blue candles being held by the 20-day moving average. Now, in terms of this one, a fairly simple trade in terms of the technicals. Just want to hurdle 20, so get above that double body top. Got support there in my view. And the trajectory, straight line, roughly line up. I think you can be behind, you want to stop behind this level here. Breakout, see if she runs, how far could we go to the upside. This level here, I think, could be targeted to correct the British pound's oversold condition. Plenty of upside, just like in GBP AUD, if our view, of course, is correct and the risk relatively low. Okay, so I like the look of both trades and also like the look of the next one, GBP SEK. Let's go and take a look at it. All right, last pair, GBP SEK. Just very quickly, the Swedish krona fundamentals. You had no big lockdown due to CV-19 in Sweden. It didn't work, cases pretty high. Also, they kept their economy open. Despite no closing the economy, economic data has been very poor recently, if you look at it, coming in below forecasts. Swedish economy's got a lot of problems, okay? Also, in terms of the Swedish krona, it's obviously correlated to the euro. Now, we're looking for the euro to fall, and we can see that the commercials have sold it hard and speculators have bought it hard. They're most extreme against each other for a few years. Now, of course, if the euro goes down, the Swedish krona will go down as well. Now, the euro going down obviously will hit the Swedish krona, but go and look at euro SEK as a chart, and you'll see Swedish krona has really pushed the euro down. Okay, so the euro's even oversold on it. So we think the snapback will be pretty hard. If you look at many pairs with the SEK in it, the SEK is overbought. Point number 4, potential risk off favours the GBP. Now, what we can see is a big fall in the pound. We try and rally and get above the 20-day moving average here. Can't hold. We go down. That tail for us, exhaustion, get some nice blues up, and now we're just around the 20-day moving average. So really, it's a breakout. Obviously, if you dip lower, you can see if the pound finds support into the lows, coming at a lower level. But at this moment in time, breakout of that double top above these bodies and tail over here. I think we should be going north. Let's draw a trajectory in there. Support is here. See. So plenty of bodies and tails around this level. Should be good support. You need to be a little bit back from the level. Don't be too tight, okay, just in case there is another spike down. But if we get follow through, clear that 20-day moving average, this time we'll be going north. How far could we go? There, 12.20. Pound could easily get back up to that level. That's just a correction of oversold. Okay, longer term could go even higher if we get risk off, but it gives just over a 4-to-1 in terms of risk to reward. So we really like it. Decent looking risk to reward trade. I think all three are. We'll see how they go. But that is the video for today. Thanks for watching me. Take care. Have a good day.